What's going on, everybody? Jeff here. Welcome back to the channel. Entire market dropping today. AMC pretty flat after gapping down. In this video, I want to give you a brief overview on the entire state of the market. And then I also want to talk about AMC and the sentiment I saw behind the price action yesterday. We're going to cover everything. Let's get right into it. First off, that W formation on the SPY, a little bit different coming into it. I was talking about this very heavily in February. It stated that 459 to 464 level retest I really felt was in the cards, and we got that. And you have to think, after the Fed had raised interest rates just 25 basis points, the market has ripped over the past 2 weeks almost an entire 10%. It is normal for it to cool off and take a breather. A couple things I want to mention, the short term and the long term when it comes to the S&P. First off, everybody is talking about the Treasury yield spread between the 2-year and the 10-year, and the fact that when it comes to a point to where it hits these lows, that there's always a recession following it. And while some of that might be true, and if you look at this on Investopedia, it says economic cycles, regardless of their length, have historically transitioned from a growth to recession and back again. Inverted yield curves are an essential element of the cycle preceding every recession since 1956. However, they don't necessarily give a time frame. Sometimes that time frame is 12 to 36 months following that inverted yield curve. Second thing I want to talk about, which could be another bearish sentiment for the entire market, is the fact that inflation is out of control, and that a lot of people are expecting that the only way to really combat this is going to be leading us into a recession. Lastly, this is actually a little bit of a bullish sign. So if you zoom out here to the 5-year chart on the SPY, I had talked about the late 2018 and how things looked very, very similar around this time frame right here. We dipped down when they were first raising interest rates. We kind of stabilized, and when we got back up to about that 280 level, it looked like things were going to return to normal. However, we broke all the way back down to 240 before very quickly getting right back up to the all-time highs. Now, this is the weekly time frame. So when you look at this, this is probably about 20 weeks. So this is about 6 months of time before we got back up and above to that 292 level. And things were looking very similar. However, is this the test back up to what was right here, that 280 level, and there still is more downside? Or was that the downside down here to the 420? And are we going to see a little bit more to the upside? Okay, here's where things get to be a little bit on the bullish side. The Treasury yields are falling as investors digest inflation data, meaning bonds are not enticing for investors to put their money. And considering inflation is so high, it comes to a point to where the only place to put your money is going to be in the market. Now, the S&P did rise back up to that 462 level on decreasing volume. When the price is increasing, but the volume is decreasing, there's actually a bearish sentiment. And before the last two red candles, you can see from March 14th, it's a little bit of a decreasing volume. It was a little bit lighter. Every day we were pumping on 60 to 70% of your average volume. And seeing some of these big moves when the volume isn't really behind it just gives you that feeling of that we're going to get a little bit of a pullback. But like I said, from just an overall perspective, from 420 to 460 in the matter of just over 2 weeks, it's okay to come back down to that 452 level that we're sitting at right now. Last thing I want to point out before we talk about AMC is this chart that is on everyone's mind, okay? And a lot of people are thinking we're back, that this is a little bit of a bull trap, and we're getting back up to that return to normal before there is a massive, massive drop. And while I do think the Fed has gotten us into a situation where it's not going to be easy to get out of this, okay, and inflation is going to continue to run rampant. We have numbers coming out on the 13th, and that is actually going to be the first one that factors in the increase in oil prices. Mind you, the 19 times previously that oil has risen 100% in a year, it has led to a recession every time. However, the fact that a recession happening, like I said, it might not happen for another 12, 18 to 36 months from where we stand as of today. So going back to all-time highs or ending the year on a green note still is not out of the question. The other thing I will mention, if you guys remember from just a little while ago, which is around that March 14th time frame is they were talking about the death cross on the SPY. And a lot of times what I've learned inside the market is what I've told everybody inside the group, when everybody is expecting the same thing to happen, that's when the opposite happens. That's when the market makers, the big funds, will completely turn things around, and that's where they bank absolutely hard. So keep that in mind going forward. Now let's talk about AMC. I'm going to zoom over here to the 5-day chart, and I will mention this is the first thing that I saw as of yesterday. Today, pretty flat. When you look at what the SPY looks like and how far it was pulling down, we gapped down a little bit of choppiness, but it's really holding its range around that 2450 area, which is exactly where we were pre-market. But yesterday, once this halt happened, and this reminded me of a normal stock that you would see that would halt to the downside. Normally, like I said, a low flow, a biotech that has low volume. This was very out of the ordinary for something that has 22 million shares, if not more than that, within the first 10 minutes of trading. But once that halt down happened, it kind of grinded out for the rest of the day. And then it was just momentum completely to the downside. Continuation shorting, sure. Maybe some selling for some retail that is not behind this at all. They're just completely playing the move. But the fact that there was no buying pressure, and the reason why there was no buying pressure behind it is because nobody wants to play, okay, with market makers that do this. All right. And this is something I talk about all the time. And if you're inside the group, you know I always say this, that make sure that when you're involved in a stock, look for those signs when those market makers are manipulating, when market makers are there to literally just steal your money when they're not friendly. When you don't see that constant buying pressure, the blocks moving forward, the stabilization, we're talking about those yanks. When you see massive big wicks, okay, when you go to buy a stock, you get filled at 1350, and all of a sudden within 20 seconds it's down to 1250. All right, those are the type of market makers that are really just pretty crappy and stocks that you want to be involved in. Well, looking at the action as of yesterday, that's exactly what happened. Now, if you zoom out a little bit more, okay, and I'll zoom to the 30-minute chart. From where we are around that time frame, okay, of that March 14th, when the entire market was at its low, we're still sitting up almost 100%. If you look at, we were on $13 and we're sitting at about $24.64 right now. It's still 100% move when the entire market, okay, was up about 10%. Obviously, it just pulled back to that 452 level, but there's still a lot of progress that has been made. When you zoom out to the daily chart, we are still holding above that 100-day moving average. We did hit a little bit of rejection, but like I said, this is the biggest move we've seen in quite some time going forward. So it's only going to take a little bit of stabilization before that buying pressure does come back. The stock is on everybody's mind. It has a lot of range. There's not a single person, whether they are behind this movement, whether they watch YouTube videos, whether they're on Reddit, they know that this stock has range, momentum, and they know that there's a lot of money behind this. Okay, so guys, that's it for this video. I'll catch you in the next one.